Hey guys, it's Adrian, and we are live again this morning. So we're testing the live stream. So probably over the next couple of days, we're actually going to move this whole thing to the live stream format. You're going to get a text that says live stream starts in X number of minutes, and then you can always watch the replay later if you can't tune in for the live event. So as you see, I'm here in my Park City outfit because it's freezing in Los Angeles, raining again. It's crazy, and today's Fed Day. So Fed Day right up in front of us is a big deal because, of course, we just had the bank failures. We had all this stuff going on in the markets. Markets are nervous as heck about what's going on. And right now, the expectation is that Chairman Powell is going to come out and say 25 basis points, no more right now. He's not going to say zero. That's highly, highly unlikely. It would show great instability on the part of the Fed. It would show that the Fed thought that the rate hikes were a mistake. It would show that the Fed thinks it's responsible for what's going on in the banking sector. Look for that quarter point. If we get more than a quarter point, look for the markets to go nuts. The markets are going to implode on half point. They are going to oscillate, probably a 1, 2, 3 kind of a motion on a quarter point. And I think that is the expectation going forward. Now, this morning in the room, we were talking once again about confluence, and I was talking to Eric about, the things that you look for, the things that you want to see line up. We had sort of an interesting conversation because on one of the trades, Julie said she just wouldn't be interested in it because of where the trade was vis-a-vis the broader market and what the market was doing. I turned around and said, look, for me, that's a 618 retracement. It's sitting right on support and resistance. This was on Apple, of course. And it would make a decent trade as long as you had a super tight stop on the other side of the entry and you were willing to take a loss if the market handed you one. That points to the fact there's no right, there's no wrong. This is all about the perception of what's happening in the market and how you would play it, how you think it's going to play out, and what your strategy is. So again, what I want to point to is the confluence that you see might not be the confluence that somebody else sees. Confluence that Julie saw, broader markets, support and resistance, downward trend. The confluence that I saw sort of lined up with what Eric saw, well, only because Eric brought it to my attention, a 618, right on top of support and resistance, good volume by price data. So bear all that in mind as we take a look at the triple Qs. Right now I'm going to go to the charts and talk about the confluence that I'm seeing happening right now. So here we have our market, right? This is the montage that you see every day that I put up here. And what you know is the market had a pretty strong rally this morning to the upside here. It opened flat though, right? So we had this sideways sort of grinding motion in the first half hour, 45 minutes of the trading day. And one of the things that I was looking at was the breakout of that opening range. So, we did have the opportunity after this open to go and do a fib expansion study on just that opening range and figure out where, if it breaks the line. And of course, the line this morning was, right about here. So if it broke through that line, the question in the room was, would you take the breakout move of that range? It broke through right here. And it managed to stay above. It came back down, right? Dipped in, broke higher, and you had the opportunity there for a profit. So sometimes those opening range breakouts are a nice play. You just need to keep an eye on what it's breaking out from. So you want to go back a couple days, see how much overhead resistance there was when the stock was trading, sort of in this opening area right here. And if you've got a good reason to think that if it can get above that stuff, that you're going to see something like this happen, then it makes for a good trade. But if you can't consider everything right around the opening bell, if it confuses you, or if you feel like there's too much information, then just pass on it. Then as the day progressed, we had this move higher that had a VWAP that was pretty easy to identify as a potential support and resistance area. And in fact, what did happen was when we got up into our travel range, got close to this pivot, we had the question in the room, are you going to short the pivot? And if you do, what's your target? Well, it never made it to the pivot. We got instead this support and resistance area here at 311.84. And then the move back down, oh my goodness, where did it go? Right down to that VWAP, to the anchored VWAP. That's the first place that it found support. So in the room, in the first hour trading pit, we were talking about, all right, you've got that move back down into that VWAP. You could take profits there. You could look for the extension back down into this more major support and resistance area. I said, however, if it was my trade, I would probably have it bracketed up and I would be taking it off right at that volume weighted average price. Then, where's the opportunity for an entry? So when price comes down, and we're still in an uptrend for the day, right? We're still above, we're net positive on the session, net positive on the day. All the markets are, all the AD lines, advanced decline lines were improving. The tick was in a constant upward motion. Everything said we might get a bounce. So in this case, when it came down to this 310.77 level, that gave us a good opportunity for a move higher. I'm going to tell you point blank here that my plan of attack was to wait for it to get back up into here and then to look for a short sale opportunity that would get me back down into that 311.46 area and then maybe down into support and resistance at 310.99 and 310.77. That's in fact what happened, and I think that you can see here, right, what the logic was for this. We came down into this VWAP when it broke that line easily. The next place we were looking really was down here. This other VWAP wasn't here at that time because we didn't place that until we made this low right here. So lots and lots of things happened very predictably on that move. The confluence, again, where was it? What were you looking for that said that there was a good opportunity to short when it got up into that blue pivot? First off, we were 2 standard deviations up and away from our average. So the average price, right, the average closing price in here, and we had 2 standard deviations of volatility. That said that if we got up to that R1 pivot, we were going to have an opportunity for a confluent reversal. That reversal happened, got us back down to this area right here. That's exactly where we expected it to go, and then the extension moved back down into here. That's just gravy. So always look for things that are overlapping that tell you that you've got a reason to expect price to make a move, right? So you've got the Gann angles right here and here. You've got fib retracements that line up. You have volume by price that suggests this is a place the bodies are buried. And you've got lots and lots of 2SD confirmation that's accompanied by this rollover in the stochastic. Excuse me. So there you have it, you guys. We've got the morning setup, and for the afternoon, we're going to let the Fed play out right now, and then this afternoon we're going to go ahead and we're going to see what happens when we get back up into some of these areas of confluence. And again, don't do anything right on the heels of the Fed announcement, because one way or another, it's going to be a whipsaw. You're going to get these 1, 2, 3 kind of swings, and it's going to be very, very hard to place stops and to time those entries and exits effectively. All right, that is your game plan going forward for the rest of the day. That's what I'm going to be looking at. I want to see it come back into these areas that we have lots and lots of overlap, and when we do, we've got trade right in front of us that makes sense. We know what our reward is. We know what our risk is. Everything can be timed perfectly. All right, I hope that helps, and I will see everybody tomorrow in the first hour trading pit. Have a great night.